Buy the dip, they said. Buy every dip, they told you, all summer. But what's happened now? We have a bloodbath in the markets. Asian stocks are down, giving up almost $5 trillion from their highs. I mean, look, these bulls are really suffering now, the ones holding out the trades on the US indices, the European indices, the Asian markets are all taking a tumble, and it's really probably due to some market corrections, pricing in of various factors around the world. People did believe the markets were overbought, and now we're coming to a point of reflection. People told you buy the dip. It worked well for a long period of time, and the new moves to new highs constantly looked very impressive, and in the headlines they were. Trump praised them for his campaign. He said all of his progressive taxation policies and policies to help companies in the US for employment are all at new highs. Well, they were, and it was doing well for a long time, and some indices and stocks went to all-time highs, but many others, in fact, didn't work so well, and reality has started to strike, especially with, real concerns about the trade war, of their economic impacts coming into play. And technically, we've seen probably an absolute horror show in the indices over the last 24 hours. And to compound the problem, the same people that told you to buy never really told you to sell. So don't sell the new highs was the mantra, and the rally was expanding. No, seriously, that the PR circus running even in early October of these bulls really, flooded the market with this aura of being a bull, and you had to be a bull. But now we're starting to see a correction, and it's a real correction. Just as an example, I mean, the United States' largest market cap stock, the NASDAQ, tumbled to 13-month lows. So that's pretty much giving up all of majority of last year's gains. Let me show you a chart to show you the extent of that. I'll just bring that over to the screen here. So this is the NASDAQ, and as you can see, this is the recent fall below the 200 the 200 moving average, day moving average, really significant as of late. And look at the FANG stocks. I mean, the FANG stocks are now down to yearly lows, really getting a big move. The FANG's getting slaughtered. The S&P Tech at 6-month lows. At 6-month lows, down now 17% from those July highs. And on the other hand, as the indices fell, the dollar had some sort of repatriation, and you saw the Bloomberg Dollar Index form some highs there. Went up for a third day in a row now. So against the EMs as well, really the dollar's getting pretty strong as a notable one from yesterday. Let me bring up this dollar ZAR that we were looking at. Really had a big push against the South African rand recently. So the moral of the story really is, never count your chickens too early, especially with being a bull in this current state of market. A lot of it actually led by earnings, especially with Netflix now down over 7% in one day's trading. So you're getting a lot of the indices cross key technical levels, and that's what a lot of markets are looking at. This the Dow Jones rather now below its 50-day moving average, which really struggled to break all through last year's bull run, and we could well, in fact, be in for a serious correction back down to the 23,000 mark, which is another 1,500 points away from current levels on the Dow Jones. If we look at the NASDAQ, we brought up the chart earlier, but again, just to put into some perspective, this weekly move so far that we're seeing, we're midweek at the moment on the trading week, but we're getting some big sell-offs, and a lot of it driven by tech, a lot of it driven by earnings, uncertainties, the fact that, you know, the market is just it was just overbought for a very long time. So really the message of this video is to be cautious, the US indices. Of course, use these moves in your analysis for your FX trades, because what seems to be the trend is that people are still repatriating their money back in the US dollar, so the dollar is still remaining strong within this sell-off, and we're getting the euro's been pressured down to 114. As you can see, it's just above 114 at the moment. It did break it ever so slightly yesterday, but the close, yesterday's close, let's have a look. I believe, so yeah, it did close below 114. So again, I mean, the dollar is strong, especially against the pound as well, which is now below 130. A lot of the political uncertainties are within Eurozone. See, yesterday, the European Commission told the Italians to redo their budget. May is facing doomsday as it were, with a committee, a cabinet over Brexit, and really a lot of these concerns are mounting up. And technically, you know, people just want to get into the dollar. They've seen the dollar rally, want to keep getting into it. And on the other side, gold is also holding its own. So gold is rallying and the dollar is rallying, which is another interesting phenomenon. And on the daily chart, we're really getting the gold trade comfortably above its 100-day moving average, which is a very positive technical sign. So we could see further moves to the upside. In my view, I think this could probably go up to 1250 if the bullish momentum continues and this pattern continues. US indices selling off, people putting their money back into the dollar, into the yen, into these typical safe haven currencies. So markets to watch today, of course, are the US market, the major FX pairs, to see if this trend does continue. And look, stay safe with your trading. Markets are indeed very volatile, and for any support on our side, you know, feel free to ping us for more great videos as well and updates like this. Hit the like, subscribe button, and thank you for watching, and good luck with your trading.